Right, I'm going to talk you through a 1 to 2.5 risk to reward trade that was taken live today with my inner circle group. And basically, it's a very textbook ZFLOW model strategy, ZFLOW model entry. It was flipping beautiful. So let's get right into it. What do we see over here? I'm just going to go through it really briefly. It might just look like a bit of randomness, but I'm going to show you exactly what the reasoning was behind this. So this is NASDAQ on the 1 minute time frame, okay? Now what we can see, just moving to the left, Asia session was kind of consolidating, okay? It was consolidating and I was hesitant to buy just directly off this zone. And I'll get into all of that. So Asia was kind of consolidating, but we did start, we were overall kind of near the end of it, slowly moving up higher and higher. So what happened was, during London session, or pre-London, we pushed up very impulsively. But if you look right here, look at this. We pushed up right here, an impulsive move up, then we retraced, then we moved up, then we retraced, then we moved up higher. But that from that initial move up, once we had that retracement, whether you want to mark it from here, whether you want to mark it from up here, you can see that retracement back down before the next move up. We did not retrace 50% of this initial move up. So that means we have an untested discounted area right here. And this typically would mean that this low that was made just above a discounted inefficiency and a discounted zone, just in general, just it didn't retrace 50%. That's now considered an inducement low. Let's move this actually over here. So now that is an inducement low. But of course, we still need to wait for confirmation, because overall, in terms of context, over here, you can see as price was coming back down, we had already swept Asia high right there. So that's the end of Asia session at 7 AM London time. So we had swept Asia highs, and Asia was kind of just consolidating and we had Asia lows. So I was anticipating Asia lows to be swept, but I didn't know when that would happen. So that's why I was a bit hesitant to just buy from the zone, but we'll get into that. So when price moves up impulsively and then retraces down and then moves up again, but it doesn't retrace 50%, and we have an untested discounted area, and that's considered an inducement low. Typically, when price breaks that low, a lot of people are thinking, well, we've just shifted structure to bearish, and then they'll be waiting for a retracement to then take sells. But they don't realize that that low that was made on the way up, it didn't retrace 50%. So we actually had a discounted inefficiency. If you look, we had 1 minute inefficiency right there. We had another 1 minute inefficiency right there. And if you go to the 5 minute time frame, exactly at that area, look, magically, we also have a big 5 minute inefficiency. So whichever one you want to use, that isn't really, it doesn't really matter. But the point is, it's understanding the zone and understanding what happened around it. So price accumulated as well on top of that right here. Look at that. Price accumulated right above this order block / inefficiency. So we had this inefficiency right here. We had this order block right here. We had this swing low right here. A lot of people are going to see this move up right here and then try to take buys. Why? Because we have an inefficiency, order block, demand zone, whatever. And people are going to look like, oh, well, we have a bullish market structure. Let's take buys. However, what we can see is we started consolidating, and we know that we had a discounted inefficiency right below this low that has not been tested. So once price does break structure to the downside, taking out this low, instead of us thinking, well, we're bearish now, we actually anticipate that to be an inducement liquidity sweep. And then once we get this move up, that's our confirmation that price wants to move up. The reason like I said previously, I didn't want to just take a buy directly off this zone was because there was a risk that we might just continue straight down to take out Asia lows, because Asia was consolidating. So I was still anticipating Asia lows to be taken, but until I got a confirmation that price wants to move up, I couldn't take a buy. So price accumulated right above our inducement low and above our discounted inefficiency that had previously not been tapped into. Once we tapped into that, and look at the time as well, 8 AM London time, only then did we start instantly moving down. Once we tapped into that area and then impulsively started moving up, you can see internally we shifted structure to bullish, breaking this high right there. You see? So we tapped into our discounted area finally, after accumulating, manipulating down, and then going right back up. So that was our manipulation confirmation. Then we had a 1 minute inefficiency created right there. I personally did not take my entry right there. I took my entry right here once we created this tiny 1 minute inefficiency on futures. And that's where I took on my top step, on my Tradeify, whatever. That's where I took my entry, but typically that's where the entry was if you wanted to actually take the setup, because we did shift structure right here. We closed above, even wicked above, that's more than enough. And we created a bullish inefficiency. So the fact that we accumulated above the previous untested discount and in this inducement low, taking out all of that and then straight away coming right back up, that to me was a confirmation that, okay, this is a manipulation and we want to continue up higher because of that discounted area that was untested and that inducement low. That's just screaming buys. So yeah, that accumulation that we manipulated into it, 1 minute inefficiency, took buys. And then we can also see we had this low level liquidity right here, just this trendline liquidity, whatever you want to call it. So that was of course a quick little target right there. That's what we took. But I was targeting these highs right here, because if you look at it, all of that is just consolidation. And we also had equal highs right here. So we never actually like swept up above and then straight went back down. We kind of just accumulated and then just started straight away going down. So all of these factors together, it told me it wants to go up, at least up to this high. And that's where I got out. And then we can see right after that high was taken. Look at this, look to the right. We took out that high and that's it. We kind of just moved sideways and then finally re-swept this big wick high right here. And then we only went down. We only went down. Where did we go down to? Oh, look, Asia low was also taken. So I was correct in saying that Asia low is going to be taken. I just don't know when. That's why I needed that confirmation to tell me, all right now is not the time, maybe later, perhaps after we sweep this liquidity high right here, because there was that nice consolidation and equal highs up there. So it was all this information telling me that yes, we want to go down, but maybe later, but I have a confirmation to buy at the moment until at least we sweep this high. So all my confirmations were telling me short-term buys, overall sells down to Asia lows, because just of the principle that Asia was consolidating, most likely that low would also be taken. And on top of that, previous daily high was also taken first, and we didn't really have much of a bottom wick. So look, you can even see on the daily time frame. If we just move here, look at that. So the previous daily high had been taken, and then we just flipped back to bearish, and now we're coming down. So that was all anticipated, and that's all because of just understanding the ZFLOW model. It's very simple. There are 4 key concepts that I use on a day-to-day basis, and that's market structure, inefficiencies, premium and discount, and liquidity. So in this scenario right here, every single setup that I take, I can always break down all of those 4 concepts, right? So once you understand those 4 concepts, it's really, really simple to actually trade and understand where price wants to go. Market structure was bullish because we can see that. We were clearly pushing up, even though we were accumulating here, you know, just kind of moving sideways, but still we were making higher highs, higher lows. We were still moving up. So overall, this is clearly bullish, right? And even though we did shift structure to the downside, overall structure is still bullish. Why? Because we had this discounted inefficiency and an inducement low. So until that low actually got broken down there, we were still bullish, technically. So that's our market structure that's telling us we're bullish. Then we had our inefficiency, which is right down here. We had 2 of them. And then we also had a 5-minute inefficiency, all within this exact discounted area, which had not been tapped into. So that's your inefficiency. And then we had premium discount, which is right here, with understanding that we had an untested discounted area down here. And then liquidity as well. We had an inducement low down here. This low level trendline liquidity right here, just above all of this accumulation, and these equal highs and accumulation up here. So everything's pulling price up and is pulling price down as a manipulation. So once the manipulation has been taken, we still have all of this resting liquidity above. So that's liquidity pulling price back up, and market structure is also in our favor, and in our discounted zone with our inefficiency, and then our confirmation as well after we tapped into that area, creating another inefficiency with that liquidity above. It's all telling me price is being pulled up, and that was my confirmation. Took buys, and there we go. TP was hit very, very quickly. How long was that? 16 to 36, 20 minutes, and there we go. Was in and out, 20 minutes, and I'm done. There we go. That's NASDAQ. That's basically the ZFLOW model in a nutshell. Very simple. You can use this concept on pretty much anything really. If you understand those concepts, just those four: market structure, inefficiencies, premium, discount, and liquidity, you can literally trade these markets very, very easily. Hope you enjoyed this video. It was just a quick little breakdown, make you understand, because a lot of people, they complain about, oh, ZamCo, your course is this much or whatever. Here's free stuff. I know a lot of you are probably going to watch this and be like, oh, well, where's more information? This is all you need. If you're smart enough, you'll learn these four things and you'll just try to apply it here and there. And trust me, you'll figure it out. If you can't figure it out, then you need more time or you need to try harder. So thank you for watching. Code ZAMCO on pretty much every prop firm. Take care, and I'll see you in the next one.